Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those over to him. We remind you that this webinar will be posted to our YouTube channel today, so if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified. The handouts for today's webinar can be downloaded in the handouts tab. If you're having any problems locating or downloading them, please just let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, which is very useful. We get a lot of questions, people asking us, which moving averages does Trevor use? You can find all the answers to those things right there. And the other handout is a CFD guide, which details all the different products that we offer at FX Choice. Again, if you're watching this on YouTube, you need to click on Show More just below the video and you'll be able to see the links. To introduce our technical analyst today, Trevor Neil. He has over 40 years experience and was the former global head of technical analysis at Bloomberg. So, Trevor, over to you.
Okay, great. Quite a big week, in fact, with particularly the Nasdaq, the Tech 100 bursting out and leading all the indices, and then another savaging in the cryptocurrencies. But let's start with the dollar. The dollar is on a strong trend. It's weak. It's starting the week. It had a very weak week last week. That's too many weeks, but now we've got substantial resistance at 45. They said 115.20 area here, building up here, but it is very substantial. So where's the support? The trend is strong. Here's the daily chart with the ADX at 33, strong trend. The RSI tells us this week. The MACD tells us a week. But let's go to the weekly chart. And if you'll allow me, I'm going to do a little bit of patting my own back here. Back in August, I said, look, this looks like a big head and shoulders top here, boys. High, 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 lower high, bearish divergence on this left shoulder to head neckline. We had a fiddly break because we broke down, then we broke up, then we broke down again. But the measured target at the time was 111. Now it seemed laughable at the time. I did put some notes out on Twitter, and I got the traditional response, abuse, instead of measured response. I'm not sure I agree with you, but anyway, as it turns out, it looks very likely now, and I think whereas people weren't bearish at 118, they are bearish at 112. The thing about this is a life lesson for me is to say what the charts tell you. It seemed outrageous to say big head and shoulders top and a countdown to 111. As the words left my lips, I knew how strange, ridiculous these seem to be. But the point is, I did say it, and I also have a little habit of that I take a trade on these. I do one lot. My sort of normal size is roughly 5. It's all volatility driven, the lot sizing. But I do one lot just to remind myself what I did say at the time. So I've still got that one lot because it hasn't rallied sufficiently to shake me out on that. So I think it's headed to there, and as you can see, there's a lot of support there. That's where I think it's headed, and it's this dollar strength is affecting everything. Just to show you that clearly, let's look at the relative rotation graph of it. Here is the 4 quadrants. The dollar's in the middle here. Everything in the G10 currencies are to the left of it and heading generally southwest. So west means that it's weakening against the dollar, and south means with low upside momentum. So they're all looking very poor indeed, and there's not a lot really to choose from. They're all really heading in the same direction. Perhaps the pound is a little bit less bad than the others. Notably, the yen is moving with the dollar. So it's in a way, if you were pairing off things, there's not much to choose between the yen and the US dollar. They're moving together. But we've got some strong messages here, and I've got a bit of a solution to that as we go through. As we go through the currencies here versus the dollar, they're all weak against the dollar. But the point is which ones are closest to their support and which ones have got further to go. Actually, quite a few of them are close to their support, which would mean basically, if you aren't on board already, it's late to join because you're too close to an area where they might stabilize. But if we look outside the G10, which we haven't done for quite a while, we find some opportunities there. So let's start with the sterling first of all. Remember what that cable looked like on the RRG chart. It was moving around into the improving quadrant. So here it is here. It's not particularly strong indeed, but it's got lower highs in place here, lower lows in place here. It's just turning down and weakening. It's pretty weak. We've got support at 133.50 on it there. If I look at the weekly chart, this is what worries me, is that I think it's coming down to a very, very significant support point. 1, 2, 3, 4 highs, 1 low, and that's it there. So 133, I don't want to really sell something which is so close to a very important support point. So I'm putting that off my list, if you like. Next, we could look at go to the commodity currencies. So let's look at the Australian dollar now. So this is, of course, rising price here is rising Australian dollar, and this is a bit of a similar picture here. Yes, it's this is the US dollar weakening and the Canadian dollar improving, but look, we're at this big support level here, and we have hit the objective of its head and shoulder, its target. High, higher high, lower high. We swing from here to here. We've got there, 71. So again, I don't like this one really, to participate in this one. Now the Canadian dollar. So this is expressed, of course, in US dollar, Canadian dollar. So rising here is rising US dollar, falling Canadian dollar. It's doing that. But again, well, you know, it's coming into quite strong resistance around 127 there through to 129.50 on the weekly chart. So, you know, do you really want to sell the Canadian dollar or buy the US dollar, Canadian dollar into so close to an area? Yes, it's probably going to get there, but there's the potential, the space for it is not that great. The Japanese yen, I'm just going to look at that because it is also at a significant chart point. It may not stay with this high correlation with the US dollar that we've got now. This is the high correlation, flat. It's moving with it. Dollar goes up, dollar goes down, the yen goes up, the yen goes down. But on the weekly chart, we can see all this taking place here at 114 or so. And this very important, and we have to go a long way left to see how important it is. My goodness, isn't this an important resistance point? 114, 114, 114, 114, 114. And last time in 2009, now we're back here. Now, potentially, if we break this, it could explode upside. That's up for the dollar, down for the yen. If we fail again, like we've done 1, 2, 3, 4, 5 times previously, then we could come back to 110. So we're at a crucial point here. On the short term, is there any clue to which way it's going to break out? I would say not. You know, the RSI is at 50 right in the middle here, but we've got the range. Watch. There's a big trade coming up here. Multi-yen moves up or down, but I'm not sure which it's going to be. So this is one for the radar to be monitoring very, very closely. New Zealand dollar. I think we have in the past been looking at the New Zealand dollar versus the Japanese yen, so I'll stick with that. Somebody had suggested that. So it's drifting here. That's the New Zealand dollar drifting versus the yen. So think of that like the dollar. So that's the New Zealand dollar drifting. But again, coming back towards 78.50, quite good support in here. And that I really don't see between here and here. But you know, if you sold here, that's great. But now you're 3/4 of the way through the potential move from that breakdown there now. So where can you participate and leverage this move? Well, let's look at two we haven't looked at for a long time. One is the rand. Actually, before I do the rand, let's do the Mexican peso. Yeah. Now the Mexican peso is, let me just show you the big picture on that first. It's the weekly chart. Doesn't this look like a big base here? This is the dollar basing here, and look, this break 21 could be very, very significant. We've already broken the pattern of lower highs. You could say this was a break, retest, and now steadying up. A lot to play for. It was very likely to break to 21. So this could plummet as a currency. That's the dollar rising and plummeting, and plenty of room on the upside. Here it is here. We're right on it. This should be top of your list to watch. Focus on this. It doesn't matter that, you know, it's not as glamorous a currency as other currencies, but believe me, when you go to Sainsbury's and you go shopping, those pounds feel the same no matter where you made them. This is the one to watch. Of course, it can fail. It hasn't broken yet, but I draw your attention to it. And a reason to think that it might happen is the South African rand has already done it. So here on the weekly chart here, there's the equivalent. Think of the Mexican peso is 21 is actually at, like it was at 1550 here. We've cleared that. We've put in, I would say, a reverse head and shoulders. Shoulders, 2 shoulders on the left, 2 shoulders on the right, head in here. That gives us a count right up to 1750. You know, that's a lot to play for. Not a lot of resistance here. I think there's great potential in this trade. And this one has already broken, and it's broken in style. The ADX is rising. The RSI is rising nicely. The MACD is rising nicely. This one is just, I think, starting. Okay, it would have been great to have bought it middle of last week, but I think there's so much to go for on this one that having the confidence of joining a little bit late and being clear that the break is for real, I think is worth it. So, you know, if it pulls back, then support comes back in at 1550. Right, now moving to any questions on any currencies, Dan? I do like questions. Any chirp up. Anybody wants me to cover something else that you don't think we're going to cover, or you want to pick me up on anything, please do. Any questions so far, Dan?
Not thus far. And like you said, if you do have any questions, please don't be afraid to ask them.
Yeah. Okay, let's look at the RRG relative rotation graph now for the cryptos. And you see that all 3 of them here, that Savaging last week, it was a terrible break. I myself was stopped out, and I thought, oh no, you know, that's really expensive. And then, whoo, I was so glad I was stopped out. It's just a reminder of, you know, what stops are there to do. They're there to save your life. And then, of course, when they go, you think it's you're going to be look like a fool and an idiot having sold at the low. But my goodness, only hours and a couple of days later, I was very pleased about that. But they're heading southwest. What's the message? West means that they're weakening versus the US dollar, which is here on the vertical line. And then the horizontal line is the positive momentum of it. There is a positive momentum. This is weak and looks like getting weaker is the message in all 3 cases. That is the message. So let's look at the charts now. We'll start with Bitcoin. So it's weak. And now it's moved down here through the 60,000 level, putting all this area here as now substantial resistance. There isn't much support, in my opinion. Look, go to the weekly chart here until we come down here, 50,000. I think it's quite vulnerable to slipping away a lot further here. So down to 50,000 here for this big support area here. This area here, it's easy, could be very little friction as we come down through there, and very difficult for it to struggle up. All the indicators are looking weak. So the RRG is telling the truth here. It's underperforming and it hasn't got much upside momentum. Said the same thing for Ethereum too. So Ethereum, it's got a smaller top, I'll give you that. Not such a imposing topping pattern. We've come back, we've rallied to it, but it looks like we're turning down from it. The support comes in here strongly at 3,600, but you know it's looking vulnerable. I've got to say it's looking vulnerable. Litecoin was the one that charged upwards because it had sunk the most, and so the rebound was so powerful in it. These 2 bars here, incredible here as it broke this zone and this zone. Then it came up, consolidated above the resistance, which was now support, which could have given some hope that it was going to hold and form some slightly bullish chart patterns in here, but no, it gave way, and it gave way hard. Look at those 4 sessions there, how much we lost there. We went down from 265 down to 200 in just three sessions there. Now we've rebounded a bit and we're bouncing at support there now. So probably there is a bit of room for this one to improve a little bit, I suppose, but it's not looking great. It is not looking great. So the whole complex of these leading cryptocurrencies has really stumbled quite badly, and is having a severe shakeout here. And Bitcoin has room for going more, Ethereum a little bit, and here maybe we're already come back fast enough to actually start to stabilize. But I will definitely be waiting. I will be waiting a bit longer to see how this all pans out. No hurry to get back into this, I must say. Now, gold.
Okay, Trevor, can I just interrupt you for a second?
Please.
Yeah, we had a request from Karishi. Thank you very much for your request. To go back and take a look at the euro yen. Is it possible?
Euro yen. Yes, of course.
Before we move on to gold.
Yeah, that's fine. Now we've got that high correlation with the dollar, and so before I look at the euro yen, let's just remind ourselves about the euro itself. So here's the euro easing off. The yen is marking time with the dollar lately, but not all the time. So let's look at the euro yen, the difference in that. So that's here. So it's coming down here, and it's punched into support. Let me just show you this on the weekly chart here. It's punched hard into this support down to 128. 128 must hold 3 lows in here. If that fails, then I think it's good 2 yen on the downside. In the weekly chart, it's looking weak. The MACD is negative and the RSI is negative. On the short-term chart, well, yeah, it's powering down here, but here, this is this 128 level here. This must hold level. There's a fair chance it will hold because the RSI is losing downside momentum. We're starting to get a bullish divergence in here, but generally, the indicators are negative. So it's not a strong support. So it wouldn't be too hard for it to break the 128 level, and as I say, that could trigger a 2 yen fall. But so far, there's a chance that it's going to hold 128. If it does, then there's quite a lot of resistance. But 130 and then 132 seems to go in twos. These support and resistance levels, 2 yens levels. But given the high correlation, the fact that it's sticking mark yen for yen, dollar for dollar with the dollar, and the dollar having such a strong trend at the moment, this is potentially vulnerable, I would say. Well, we've got a clear message when that is breaking. That's 128. I hope that helps. Okay. All right, Dan. So going to the gold now. The gold on the weekly chart here, I had talked about this sort of triangular shape. I put the dash lines in here because the highs and lows don't match up very, very strong perfectly. But there's definitely a narrowing up shape here. I thought we had a good breakout here once we cleared that 1830 level. And we started to power off, but it's already, as soon as it comes to the first resistance point, which we'll see on the daily chart, bring it in here, into the first resistance point, which is here, back from May and June time. It hit its head on it. 1880 we had said, and barely got to 1880, and it's struggling to go through. And that that resistance is not that strong. It should. I had a good, my personal feeling was that it was going to actually break it. But we're easing back now. We're easing back to very, very solid support around 1820, 1830 really, and that it should stabilize around there. But it is kind of disappointing that it's found so much struggle with what was not really a big resistance level. It's been so difficult, gold, and particularly if you're a bull, keeps getting thrown bullish news, and you know, it's stubborn about not wanting to follow it. And as soon as it finds an excuse to stop, it does. It's very stubborn, you know, very frustrating market. The gold silver ratio is pretty well flat here, so there's nothing to choose between gold and silver. Silver, it too came to its first resistance point, backed off from it, easing, but it comes to its support much more quickly than gold does, and so I think it's probably ready to stabilize right about now. And that's not a bad chart pattern that will leave us with impulse, reaction, impulse, mild reaction, and this one I would, you know, my conjecture, and you know, I don't say that it's going to happen, but my guess is that this one is going to lead us up and is going to find it easier to go up than gold itself in the next leg, which I think will be to the upside. But gold itself is very, very frustrating. Just show you something, you know, I'm working on something about gold as an investment, but that's one of the things we could say, well, gold versus other things, you know, would you have been better in gold than other things? And one of those things would be the S&P. I made this a very long chart here. I can go even longer in this chart. And look at this now. It's since 2011, it has underperformed. This is oh no, this is silver. Yeah, sorry, that's a mistake here. Same story, by the way. But just get the right thing in here. Okay, gold, silver. Since 2011, it's been underperforming. It had little periods where it rallied a bit, but here it's underperforming. It's coming back to big support, which is below 1, really. It's at 0.9, which is here from 2003 to 2004. But, you know, in sight is the worst ever performance of gold, which is at which was in 2000 there. So it's, you know, if you're given a choice, if you only had two things you could invest in, stock market or gold, without doubt, in recent years, since 2012, the answer has been it has been the stock market. It wasn't the case from 2000 to 2012. That decade was the decade of gold. But that's sort of embedded people's in memory, isn't it? A lot of people are still thinking that gold's always outperforming the stock market, or it's a good investment or something like that. It isn't. It isn't a good investment. So let's look at a good investment. Before we do that, let's look at Brent crude oil. Brent crude oil also.
Trevor, can I stop you just before you go too far?
Yeah.
We've had a request from Roland. Thanks for your request, Roland. He's asked, could Trevor please have a mid to long term look at Brent and silver? So
okay, just going to do Brent. Silver, yep. Did I not do that?
Yes, I think.
Yeah, so I did silver actually. My view about silver is it's going to go up. It is not going up at the moment. It's easing back, but I think it's another pullback in this journey up, and it's pulled back to support. It should stabilize, I think, very, very close to here. Breaking the high here should release more energy. That's the 2550, by the way, here. Then we get, you know, because, you know, we went down, there was, you know, there's layers of resistance. But what I really see dominating here is a reversal pattern. Low, lower, low, lower, low, lower, low, lower, low, higher, low, higher, low. So however you design it, it looks like a head and shoulders bottom here. And this, the most conservative neckline would be this one here. We broke it, we're retracing to it. I suggest and I feel that we're in the process of stabilizing at it, and then we'll push up. And the count, of course, from that is right up to this high here at $29 up there. So I like, at the moment, there's nothing to choose between silver and gold. The ratio you saw was flat. But I think that of two charts, silver has the most potential, and it's actually forming the pattern, which I think is about to become quite bullish. It's not quite there yet. We haven't stabilized enough yet, but it does look as though it's in the process of doing that. And now start continuing this journey, impulse, reaction, impulse, reaction, impulse, reaction, next impulse, continuing this reverse head and shoulders bottom. So we asked for that, and then crude oil. Yes, so I was about to start crude oil. So crude oil, is on the way down. It's in a bear market. It had this big struggle with the 2018 high. There, look at it here. It's so important to level. If we cleared that level, we could have released loads of energy, taking us up to 110. It's taken a while to do it. There were clues in the weekly, because we had these lower highs in the RSIs. We made these highs here, but the MACD on the weekly has turned down now. There's no argument. This has topped out, and we're on our way down. We're coming down to some support. I drew this cigar here a long time ago, and never thinking we were going to see it again. It was hurrah that we'd broken through it on the upside, but now we do look like we're coming back to 75 area. There's quite a lot of power on the downside. The trend is beginning to strengthen on the downside. So it's gathering momentum on the downside. I think it's, it's disappointing. It's really disappointing, but, not in a way that's surprising that it's done it. If I bring in more data, look at all the things that have happened at this price in the past. So this was a consolidation here, and we broke down from it here, and we, quite a savaging. Then we broke impulsively. Then we came back to it. Then we broke impulsively. Now we've come back to it, if you like, 2 more times around this just below $90 level here. It's technically a very significant one. I had high hopes that it was going to make the big break to the upside, but it just took too long. We've got massive liquidation of hedge fund positions, and we see in the current traders report they've given up on it. And so that leaves it quite capable of coming back at least to the 75 support here, and that might not be enough to hold it. But at the moment, this pattern is still bullish, so it just may be delayed, and then, in a couple of months' time, we may be looking at that level again. But at the moment, intermediate term, I think lower. Worried. Okay, hope that's good for you, Roland. Let me just put this back, sort of more sensible time frame. Okay, now going through the stock indices, we've got a definite order. Shall I go from strongest to weakest? I think I'll change my order. So strongest is the Tech 100. The Tech 100 is in blue sky. There's only sky above. It made its break, the 15,500, level. We cleared that last week. We talked about it last week, and that releases a lot of energy here. It's looking tremendous. So here's the short term, little bit of a pullback here. You were lucky if you had the time to catch that there, 16,000 level, but we're off again here. We're making a new high this morning. It's looking tremendous. The ADX here, 33, good strong trend in it. This is the one to be in. It's leading. The US 500 is not quite as stellar. It is in the big picture. Of course, it is in the big picture. It's looking tremendous and pushing up strongly. But in the shorter term, given the two, if you just could be in one market and as opposed to two, then what has happened here? We've frozen. Yeah, long last. We are just close to the high here. The Tech 100 is in blue sky. I think it will break it, and this one will follow. But you'll get more bang for your buck from the Tech 100. Next one of the majors is the German 30, and this too looking pretty good. The ADX reading here is a modest 22. That's a trend strength. The indicators are looking okay, but it's looking a little bit soggy at the top here. It's not got that steep angle to it. It's not as good looking. It has broken its high. Maybe you might find this more attractive in that if it were to pull back, it's closer to support, and so any punishment, for excess in, let's say, in the Tech 100, probably will be felt less here, less beta in this one, so it could be considered a safer one. But they're all going up. But what about poor old FTSE, the UK 100? Okay, it did begin to look as though it had some life in it, but it was a sort of gust of wind that it got from the other markets, and it made this old turkey fly for a moment. But it isn't going to fly, isn't it? Is it? What's stopping it? It's this horrible, incredible consolidation. 4 years long, this consolidation here. Look at this here. That's all of that there. Everything else is above the equivalent period, and no other market had this sideways, this extended sideways movements. We punched into it. That's true. It was in fact quite impressive how it's done it, but it's just like it's a mire. You know, it's like trying to run through mud. It's well, actually, you know, we've already run out of energy in it. We pull back here. It's pulled back quite hard. There is very good support here. It'll probably find support close to here and begin to steady up. But given, you know, you've got choice here, the order of beautiful to ugly is most beautiful is the Tech 100. Also beautiful is the US 500, but not so beautiful. The German 30, I would say, is probably a safer investment because it's closer to its support, but it's not as beautiful. But here we've got an ugly creature, I'm afraid to say, and the FTSE on the UK 100. All right, my friends, any questions?
No, that's it, Trevor. Thank you very much. And thank you very much for everybody for attending. Don't forget that we're posting this webinar to our YouTube channel some point today. So if you came later and want to watch from the beginning, you can do so there. Also, if you do head over to our channel, don't forget to click on the, to subscribe to our channel, click on the bell to get notified of any future releases. Okay, Trevor, anything else to add?
No, I think we've got some clear pictures at the moment about what's going on. The dollar, I mean, it's very, very striking. The dollar cryptos have gone, from well, that was such a bad knock that they took last week, and there's just a lesson in never forget your stops or never get comfortable and forget your stops, because that could have been catastrophic. The 3 or 4 days down, the percentage drop in that was savage, and I think a lot of people lost a lot of money in that. But they got the order of things in the stock indices, which I've gone through thoroughly, and then we've got the stock in with the US dollar. What's your best? Well, the problem is it's late to join this. We have been bullish with the dollar really since August, and made that great call for the euro 111, which we haven't got there yet. But I mean, who thought it was going to happen? I had my doubts, severe doubts myself. But it just shows you, just say what you see. The charts are fractal, and you see these patterns. And I think that was a big call, and it was a good call. But now I think in order to find outperformance, you need to go outside the G10, and there's one particular one, isn't there, which I've directed you towards. One is already just broken, and one is about to go. Okay. All right, my friends. Thanks very much. Thanks, Dan, for looking after us. Thanks for your questions, everybody, and have a great week. And may the trend be with you.
And also for you, Trevor. Okay, goodbye, everyone. Cheers. Bye-bye.
Thanks. Bye-bye.